T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now in SM.
Okay, you sound good.
Discovery Houston, negative return.
Copy, a negative return.
The house of pain is in effect, y'all. I say the house of pain is in effect. You know the house of pain is in effect, y'all. And anyone that steps up is getting wrecked. Jump I came to get down. So get out your seat and jump around. Jump around. Jump around. Jump around. Jump up and get down. Jump, 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 I'm the cream of the crop. I rise to the top. I never eat a pig cause a pig is a cop. Or better yet, a Terminator. Like Arnold Schwarzenegger. Trying to play me out like as if my name was Sega. But I ain't going out like no perk, bitch. Get used to one style of yo when I might switch it up and around. Then buck, get down, put out your head and then you wake up in the dawn of the dead. I'm coming to get ya, I'm coming to get ya. Spitting out lyrics, homie, I with ya. I came to get down, I came to get down. So get out your seat and jump around. Jump around. Jump around. Jump around. Jump up and get down. Jump, 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 everybody jump, 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 everybody jump, 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 everybody jump, 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 everybody jump, jump, jump. Yeah, this is dedicated to Joe, the fighter, Nicola. Grab your bows out.
Good morning, you filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw the hedgy. Are you having a good day today? Did you guys have little sleep? Lots of sleep? I got less than I probably did yesterday, even though I told you guys to get more. Why did I get less? I just can't stop working on stuff. I got stuff going all the time, constantly working on things, and man, the coffee is running thick through my veins right now. Let me tell you guys what's going on here. First off, thanks WM for the nice pick there. Cherry Monster said, good morning. And then she said, are we heading to $8 to $10 or is it noise? I can't promise you one way or the other, Cherry, which way this is going to go. Typically speaking, when we have a reversal off of a bottom, we don't normally see another push back down right away. It just doesn't usually happen that way. It's looking like that's going to be the case as it stands right now, because our bottom was $14.23, and then our top went to $17.28, which was a 21.4% increase in price, which is enough to reset a synthetic price failure, which means it could go down up to 20% more or 20% or more from that point. So it is a possibility that we could continue to go down, but we'll just continue to track this and see whether or not we break past that 1423 or not. SSR does trip today. If I had to guess, they're going to try and trip it again. They will continue to trip this thing as many times as it takes in order to keep liquidity going. And 1498 is the price. So in order to trip SSR, it would be less than our bottom currently already is. So there is that. Let me see here. Somebody said, JP, that borrowed change, 3.23 million is the final number from yesterday. I have not updated Ortex because I want you guys to see those numbers. I'm updating my numbers right now so I can refresh that for you. Ironically, the amount of shares that were returned on Friday was 3.25. So the amount of shares that were returned on Friday have now come back in from yesterday. And speaking of which, that is a final number for the day. So that's either new short interest that's opened or it's on loan amount, and we'll see that here in just a second when we run through the numbers. Shares having been borrowed so far this morning, guys, it's really high. The total amount of shares that we witnessed borrowed yesterday was 5.15. Go ahead and plug that in. 1 second. So total amount of shares borrowed yesterday was 5.15. We're already up 5.75 this morning. So lots and lots of shares being borrowed this morning. Right now volume is 71.16. It's decent. It's not as good as it was yesterday. So I was kind of expecting to see more volume today. I really was. I was expecting to see more volume this morning than what we had yesterday. So, and I'm not seeing that in the pre-market. However, this is not it's not scary looking like it has been in the past. So it may not be quite as high as it was yesterday, but it's still pretty decent volume. It's not terrible. Let me go back and see what you guys are saying here. And Joe, I don't know if you know it or not. At the very end of the song, they say, "This is dedicated to Joe." I don't know if you heard that. I'm not lying, guys. Stonky Kong is gonna come out and he's gonna do a little dancing for the opening market this morning. He'll come out and dance to that song for you guys. Good morning, Boris. Okay, I just wanted to make sure I went through. Where's our friend Chan Chan? Where is Chan Chan? Trash. Where's Trash? Trash. We need to hear we're trash over here. All right. So yeah, he probably did hear. I don't know if he heard it in the song though. So let's look at the data, guys. Well, actually, first off, every single morning we got to clean the glasses, right? We got to do a routine. Let's clean the glasses before we dive into the numbers. Did you guys have a good night? Maybe have anything good happen to them? Type it in there. Tell a story. Got to get the glasses going here. It's a beautiful day in the neighborhood. Mr. Rogers, he knew it was going down. He was like, "Yep, kids need repetition." Us adults do too. Ah, fresh, clean glasses. There's nothing more beautiful than a fresh pair of clean glasses going on your face. I'm ready to dive into it, guys. You ready to dive into it? Inflow versus outflow yesterday, it was looking really good. It was legendary, absolutely. All right, let's take a look at these numbers. I'm going to log into Fidelity. Believe it or not, I got on here early and still didn't log into Fidelity. Somebody needs to slap me. Slap me silly. Let's see what we got going on here. Got my two-factor authentication out. I say that for a reason, guys. I say it for a reason. If it's good for me, it might be good for you. And I'm gonna take a moment every single morning. I'm gonna take a moment every single morning from now on to cover the 3 golden rules, and I think it's important, and I'll tell you why. There's going to be opportunities for you to invest at these really low prices and make decisions that you may not want to make, and I'll tell you why. Let's look at the numbers, or let's look at the golden rules. Golden rule number 1, only buy shares with money you don't need in the foreseeable future. Remember that, guys. It is super important. I want you to remember the reasons why some of these golden rules are the rules that they are. You do not want to be emotionally involved in this stock. You just do not. If you can be unemotionally attached to this, the better. I know so many of us are probably very emotionally attached to this. I understand. I totally get it. But that is the reason why it's golden rule number 1. I'm going to take a moment to talk about these 3 rules every single day. Rule number 2, buy and hold. Why is buying and holding so important in this stock? It's because that's what causes it to go. That's what causes it to do what it's supposed to do. Squeeze. We're looking for a squeeze play on this. Buying and holding is key. And that's why rule number 1 is so important. Rule number 3, only use a good broker who allows pre-market and after-hour trading. Cash account, no margin accounts. This is not financial advice. but most of the really big movements in price happens in the pre-market and aftermarket hours. I was just looking at a stock just the other day. Let me just see if I can find it real quick. I just want to show you something real fast. Which one was it? There was a stock. There was a stock that had like basically all its movement was like rate during a specific period of time, and I don't see it on my list here, but I wish I could remember which one it was that I was looking at. But I mean, look at this right here. I mean, this is not a great example because it's just look at the movement though. Imagine if this was spread out over a much larger amount of money and possibly days, and most of the price movement action happened in the pre-market and aftermarket hours. Losing the ability to be able to trade in those periods of time could be absolutely detrimental to how much you make out of this play. So I'm throwing that out there. I want you guys to hear it every single day. I'm going to throw these rules out there. It is important that some of these rules be followed. It's not financial advice, but because ultimately it's your money and in your choice. Ultimately. All right, guys. Let's take a look at the numbers now that I've gotten off my soapbox. Let's take a look at what's going on here. Starting in the top left-hand corner, price prediction tallies. I never got one from Duncan. I didn't get it. If he comes on and jumps on and tells me otherwise, I'll believe him. But I had 16 to 19, and it looks like I got a point. Eric had 15.6 to 18.6. He got a point. And Monty had 1575 to 1875, so he got a point. So all three of us got a point. I'll have to wait to hear from Duncan one way or the other. There's a chance he may have sent it to me and I just missed. I have many places I have to look for messages. Huh. I somehow managed to miss Monty at the very top there. All right, so price prediction tallies. Monty, Eric, and myself all getting price prediction points for yesterday. That is just for fun, guys. It's just for fun. Don't take it too seriously. It's just trying to keep ourselves sharp. Short exempt volume, super high. Super, super, super high. I don't know if you guys saw that. As soon as I saw that this morning, I was like, ooh, that is nice. Because I want to see 1 million. As soon as I see 1 million in short exempt volume, that to me is a huge indicator. 738.5 thousand. Huge amounts. Anytime SSR is tripped, it's going to be very, very massive. Let's update Ortex and see what we got. Here we go, JP. You ready? Here comes your estimated current short share interest of the free float. Ah, they made it under 20. Let's see if we have new data. Utilization 68.78, so slightly down on utilization. And our day-over-day price was a decrease by 7.4%. All the information is updated there. Moving down to off exchange. Last reported numbers that we had was 51.74 in the off exchange and 13.46 on the EDGX. The final numbers was 52.44 in the off exchange and 12.71 in the CBOE EDGX. Well, the EDGX was high, the off exchange was lower than the 30-day average. But I think we've seen for quite a while now that the ETFs is where the battle's really happening right now. So what's next? Moving down to Ortex, as you can see, the estimated current short share interest of the free float is still pretty high, but not over 20 like JP would like to see. We'll figure out why that is. We'll see how much the on loan amount changed by, and see what's going on there. We'll take a look at Vortex in just a minute. Moving to the top right hand side of the screen, institutional ownership 172.101 million. Let's refresh that bad boy. 173.137. So it's increased to a new all-time high of institutional ownership to 173.137. The last time the record was set was on 113. 170. Yesterday it was 172.1. Today's 173.1. I did not expect to see that going up, by the way. And so the new record is now set on the 20. I'm going to put 25th in there because we get the reporting in. I get the reporting in when I first see it, so it's today. 173.1. It's an additional million shares purchased through institutions. Moving down to Max Payne. Max Payne is showing $20 for this week. Was yesterday. If I had to guess, it's going to be down to 18 today. 19. 19 it is. And those options. The gambling floor of AMC. I don't know why I'm laughing. It's not really funny. Let's see here. At a really high strike price of $60, there was 13.8 thousand contracts yesterday. There is now 15.6 today. As far as open interest goes, highest amount of open interest for the calls is at a $20 strike price. Yesterday it was 23, so dropping $3. And it was at $23, it was 8.2 thousand contracts. At $20, it is 10,000. 10.6. Yesterday morning, the highest level of open interest was at a $17 strike price for the puts. It still is. It was 13.8 thousand contracts. Today it is 12.8. So some of those positions are being closed out because they are in the money. Oh, I just scrolled up, guys. I scrolled up and I saw it. A little late, but I saw it. I have to change the number. The highest amount of open interest on puts is at $10. I missed it. And there's 15.5 thousand contracts. So the spread is a $10 spread, signaling for a $15 close for the day today. Let me move a couple screens over. These are my first transitional glasses. I don't like them. That's like, I don't want to have to tilt my head back to read. All right, what's the first thing I want to cover? Well, let's go straight to utilization. Utilization taking a pretty big nosedive since January 18th. Now, what is utilization? Utilization is simply the amount of shares that are being borrowed compared to what is available to borrow. That does not mean anything terrible when that number is low. It just means that all the shares that could be borrowed are just not being borrowed right now, which is completely fine, especially with long institutions taking on more shares. Shares on loan, 11119. So 111.19 million shares on loan, divided by our utilization of 0.6878, giving us a grand total of 161.6. Let me just confirm this data real quick here, guys. It's a new high for us. I just want to make sure something. That's what I thought. Let me refresh this. Yeah, you boogers. They didn't update this. They were showing a different number here. Bastards. It's 110.1. Pulling a quick one on me. I was too. It's really me being too quick. Got to this too quick in the morning. It usually updates around 6:30, so it's updated now. So let's do the correct numbers. 110.1 divided by 60 or 0.6878. Okay, there we go. Still a new high. Still a new high. Our record number of total available amount of shares to borrow was 159.3 yesterday. Has now increased by about 700,000 shares to 160. I'm just going to put 160 million because it's pretty close to. I'll just put 0.07. There we go. Put the whole number in. Max out that we've seen prior to this was 155, so we're definitely getting way up there. Subtracting out the total shares on loan gives us the remaining amount of shares that are left to borrow. How much do they have in ammunition? And let me tell you, they have been stockpiling. Stockpiling. Yesterday was 58 or 48.153. Today is 49.975. If they're gonna get attacked by price moving upwards, they're gonna need a lot of shares to start loaning. A lot of shares, and they're stockpiling. So that's our utilization right there. On loan amount, slightly taking a dip from 111.1 to 110.1, so a 1 million dip in on loan amount. Our estimated current short share interest of the free float taking a slight dip as well. And then our on loan average age per day should be going up. And it's not, it's still dropping. Okay, so this means that they are closing out positions. When you see this number, when you see on loan average age per day dropping, and you also see on loan amount dropping as well, then that's closing of some positions. So the question is how many did they close? In this particular case here, we're only seeing about maybe 2 million in closed positions. Because usually what you want to see, I'll get rid of this number real quick. Usually what you want to see is you want to see these numbers going in opposite directions. Like back here. Let me take a screenshot. Like here. This number was driving down as this number was driving up. Here this number is driving up and this number came down And now you got this little spot right here where number is starting to drive down. And then you have this right here where this is also driving down. So this is a closing of positions. So whatever price range they're at here, allowed them to be able to close, and that's like the worst straight line I've ever drawn in my life because I can't draw straight lines. Whatever positions that they had, open put positions from the past that were above this price have been closed now. So some of those positions have been closed for sure. The question is where is our actual current short interest? Is that dropping? Well, our current short interest number is at 102. And if we take a look at that over time, it's one of the higher numbers that we've ever had. However, yeah, it's not taking a dip yet. So it's still looking pretty good. I mean, even though they've closed out some of their positions, it's still looking good. The question is who's closing out their positions and how much are they closing out? I'm sure they would love to get this down to below $10 so they could close out their positions. Because let me just tell you, they have a crap ton at 10. Oh, no, I think it was 15. 15 was, I think, a big amount at 15. So possibly some of those were closed out from the past when we went under 15 yesterday. Whether or not they can close out those ones that are sitting and parked there at 10 is probably that's the best question. They'll have to, in order to close those out, they'll have to drop this below $10. But they're going to incur more short interest as that happens. Orders by Fidelity customers. We have AMC coming in 10th this morning in volume. Yesterday, our buy-sell ratio was 70-30, which is really good numbers. GME not on the list this morning. There it is, 11th. Yesterday, they had an 87% buy to 13% sell ratio. Really, really good numbers. Super, super good. Hello, move. Shares borrowed this morning, guys. Like, they're planning something. Something's going on here. They borrowed a lot of shares. Went from 6.6 million shares down to 950,000, and they returned almost all of those, all but a million of them. Over here in the ETFs, looks like they just started borrowing out of the ETFs now. So we have additional shares to add to this. Let me just do the math real quick here and figure out what it is. $755,000 shares on top of the 5.75. I'm having a hard time. Yeah, 6.5 million shares having been borrowed for the day today. You ever like come up with a number in your head and you're like, yeah, that's what it is, and then you do the math on it anyways on a calculator and you're like, why did I just do that? I just spent a lot of time on that. I didn't need to. I do that all the time. I was like, I'm one of those guys who counts the till 3 times. I count it once. I count it a second time. If the second time doesn't match, I count it a third time. I always counted the till 3 times. That was annoying. Calls. We have 2.2 thousand contracts in the money on the calls. This is way back in the day, guys. I haven't counted a till since I was like, geesh, I think the last time I might have counted a till when I was like probably 21. Calls. We have 2.2 thousand contracts in the money on the calls. We have 27.9 thousand contracts out of the money on the puts. You guys are all like, are we listening to a guy who's been working retail forever? No, 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 no. There's our short exempts, guys. Super, super high amount of short exempt volume, and that's always going to be much, much higher on days where SSR is tripped. Today, SSR trips at 14.98. 14. You can almost bet your bottom dollar you're going to try and drop the price down to that. They've been trying to do it in the aftermarket and pre-market hours. Lately, that seems to be within the last day or two has been kind of like their MO. Drop it down as much as you can in the after hours, and yeah, let it do its thing during the normal hours. The market's over on the eastern side of the hemisphere. Some red. The ones that were red were really, really deep in the red. Some green. IWM in the pre-market is down 1.21. Tesla is down 3.11. Amazon is down 2.02. Cinemark is down 3.23. It's looking like we're going to have a red day today, guys. Doge is up 2.2. Bitcoin down 0.41. GME down 4.14. And AMC is down 4.27. Refreshing to see what our inflow versus outflow is from yesterday. 23-point spread between the two. 23-point spread in millions of dollars. So $23 million worth of inflow than outflow, which is pretty impressive. Really darn impressive. Volume currently at 76.93 thousand shares and climbing, and that's 22 minutes still until our 7 a.m. pokey stick of volume. On the daily interval, I'm just looking at Vortex Indicator and RSI down here right now. It looks to me like we have equal amounts of buying and selling pressure. 21.17 is RSI, very, very, very low. On a 1 hour, we have more buying pressure than selling pressure with an RSI of 38.34. On a 30-minute interval, we have more selling pressure than buying pressure with an RSI of 39.09. And on a 5-minute interval, we have more selling pressure than buying pressure with an RSI of 36.05. Some pretty impressive walls set up over here in the order book. Just kind of noting that the posturing this morning on keeping price down, and oftentimes when these get hit, here's one right now that's 49,908. Oftentimes when these get hit, they don't stay. Like they take a couple hits and then they disappear. I'm kind of curious what's going to happen with this one. 49,908. Let's actually watch it. Let's see what happens. Just kind of curious. I just want to see if this thing takes a few hits before disappearing. We'll just keep an eye on that for just a minute, guys. I just kind of want to see what's going to happen there. All right. WM challenged Lou to a sit down in front of a computer to do technical analysis like Casey's still waiting for his reply. No more lies, no more hype. I don't know, WM. What I've come to the determination of is that you know, some YouTubers have a purpose for one thing, and other YouTubers have a purpose for another. If people get I don't know. I mean, he has said some pretty damaging things, but at the same time, you know, if he's entertaining people, and I guess he's entertaining people, that's what I guess that's maybe what people need. I don't know. Uh, Kind of, sort of government divides. In order for them to do that, they would have to close out. So what I would suggest is you know, they can close out of their positions and still have those shares, those existing outstanding shares out there. Um, Sorry, I'm watching this. I want to see every time I see that order book move. I'm glance over to make sure. Uh, so they can close out of their positions without unraveling the synthetics that are out there. But the only way that those will ever come off the books is by unraveling those. They could close those positions and have them not unraveled. That would be a possibility. Um, so yes, they could unravel without, or they could close positions without unraveling. Absolutely. But the web will be spun. I mean, if you looked at I don't know if you looked at the order book for, not order book, the options chain last week. There's like there is very large amounts of open interest at 50 cents a share. 50 cents a share. So in order for them to completely close out of their positions, they would have to knock this thing down into oblivion, like bankrupt the company essentially. So, you know, somebody's going to get stuck with uh, some leftover short interest that's open because it's all the way down to 50 cents, and there's an incredible amount. I mean, I don't even remember what the number was. I'd have to go back and take a look at the show um, to see, but it's a high amount, very very high. So it's not like they can close some of their positions, but not all of them. They would have to bankrupt the company to close them all, especially at the levels that they're down to. Is there a pokey stick of volume coming? No, we got about 16 more minutes left here. I'm just watching. I'm watching the order book, guys. I really want to see that 49,908 take a hit and see if it holds. Rose, I think a lot of people think of covering as being the same thing as closing. So I want to say that, you know, the actual term would be closing, not covering. Covering is it's not the same thing. So closing a position is when they get it off the books and they're in the money at that point. Covering is when there's forced liquidation. Do you guys see that order book where it says 1-1 right there? That's how they're stair stepping the price down. That's a short ladder attack right there. Incrementally stepping the price down. So covering, Rose, is when it's forced liquidation to close the positions. So there's a big difference between covering and closing. Huge difference. GD says, I'm starting to believe this is a long squeeze, not a short squeeze. I don't know what gave you that idea. So closing out puts is a victory for them. How much is enough for them to start buying back shares to return? They're they're not gonna try to. Let me see, Anthony. How much is enough for them to start buying back shares to return? They're not gonna return those shares unless they're in the money. So they'd have to actually knock the price down in order to close the position. The only way they close the position, well, they can do one of two things. They could actually buy the shares. Let me think about this for a second. Yeah, they would have to buy the shares to close the position, but they can't buy the shares because nobody's giving their shares up. So they can't buy the shares without the price absolutely going astronomical through the roof. So the only way they can close the positions is by knocking the price underneath what they have, and then they can just borrow and close out the position with a borrow, and then they can just pay off the borrow. No big deal. But they can't just collect shares and close them out at any given price, because once they start trying to buy actual shares, remember, they got to buy real shares, right? And we've talked about this before. Like I hate saying a difference between real shares and not real shares, but there is actually a difference between place holding IOUs and actual shares hitting the market. And if most of the brokers are all just holding on to shares, those actually have to be sold into the market for those to exchange places, and that's why you see such high synthetic volume, um, and like an unraveling of all the movements that if every time those shares hit in the market, it's like we got to do this. We got to make all these trades quick, and so you see synthetic volume all over the place. So, but then eventually those shares wind back up into people's hands who hold on to them, and that's when you see volume start to dry up, right? Because there's no share activity. So they can't. They're not just going to be able to go to the market and buy the shares. There's 102 million shares on loan, or more than that. There's 110 on loan. They can't just. There's only 513 in existence, so they can't just go to the market and buy those to close out positions. There's a lot there. There's a lot. Right? It's not going to happen like that. So dropping of the price is the only way that they can really close out those positions. What is up with my camera? Why is that camera in there? What the heck? Uh, oh, I get it. I know what it is. Okay. I just want to see that 49,908 take a hit. Good morning, Benjamin. It's so cold these days. I saw Amish people buying electric heaters. Hey, WM, I gotta ask you a question. You know how Amish people make those log electric fireplace plugins? How do they test them? They don't have electricity. How do they do it? How do they test their work? You've seen those before on TV, like late night TV stuff where the Amish people are selling their electric heaters that look like fire logs burning. How the heck how the heck did they test their work? They don't have electricity. What do you think about the video? Oh, Jesus, I think that video is crazy. So Jesus sent me a video, guys. I haven't had a chance to do it, Jesus. I told your daughter that I was like that I was gonna check that out. I'm really gonna check it out. Trust me. Trust you me. So Jesus sent me a video, guys. I'll probably put it up for you guys to see, but at opening market, and I remember you guys saying something yesterday too. I remember there being a lot of comments about, did you see that green candlestick? Well, Jesus sent me a video where, like the price that was showing up on Webull versus the price that he was getting on his terminal were showing two different values, but it wasn't like it was showing market open on mine. Jesus, correct me if I'm wrong, but I think yours was showing market open as well, but it was showing a much higher price. It was very, very interesting to see. I'm still gonna have to sit down and like try and analyze what exactly happened right there. My guess is that I don't know. I'm gonna have to sit down and look at it because it was really It was really kind of interesting to see. WM saying I hope they didn't fire Chan Chan today. Yeah, man, that would suck. That would kind of suck. Lavar, not really. Like, I mean, they would have to basically knock this price all the way down to zero. That would be the only way that they could do that because they actually have, if you looked at the put chain as of last week, there's massive amount of puts that they've had to push out that are like super, super, super low in strike price, like 50 cents. So the only way they could actually close those positions out is if they were to drop the price into oblivion and bankrupt the company. Watcher 2000 says today a bull trap Tuesday. Go to dead. That's right, Remtech. Go to dead. All right, so let me pull up that little watcher. Watcher's asking an important question here. I think I might blind you guys in three, two, one. Okay, I wasn't sure how big this was gonna pop up. It's not too bright. Um, so based on this matrix that I ran, that I did this last weekend, um, if if we have a red day on a Monday, our chances of having a green day on a Tuesday is a 19% chance. 19, so 1 in 5. We have a 1 in 5 chance that today, historically speaking, for the last year, by collecting a year's worth of data from 114 of last year to 114 of this year, and collecting all that data together, we had a 1 in 5 chance that we would hit a green day on Tuesdays if we had a red day on Monday. So we had a red day on Monday. It means we have a 1 in 5 chance that we'll have a green day today. I have a prediction for today. Oh, you can't see this. Dang it. Hold on. Taking you back to the front page. Uh, Hopefully you can see it now. So I'm looking right here. So we got Tuesday, and Tuesday has and over here in the last column you can see Tuesdays in general we only have a 46% chance of being green on Tuesdays, which actually is the second highest green day that we have out of the week. Mondays are usually our best day, irregardless, period. 66% of the time we have green days on Mondays. 46 is our next best days are Tuesdays. Our worst days are Wednesdays. We only have 38% chance of hitting green days on Wednesdays. So here's what I would suggest to you. And I have a feeling that we're going to close slightly higher than we did yesterday. So yesterday's price was 1664. I think we might close it like maybe it's just a penny or two more. 1665, 1666, I don't know, 1675, something just slightly higher than 1664. If we have a green day today, and this is a big if, but if we have a green day today, I would suggest to you that we may see a reversal because we only have a 1 in 5 chance of having a green day today. And if it happens on a day where we have a very low percentage chance of hitting that, tomorrow we only have a 19% chance of hitting a green day tomorrow, irregardless of whether today is red or green. So if we hit a green day tomorrow also, the chance of hitting a green day on Thursday is only 13%. 13%. Very, very low. I want to see a reversal either today or tomorrow so that we can have that 13% chance for Thursday. Because if we see a green day on either today or tomorrow, and then we end up having a green day on Thursday, we have a bona fide 100% reversal in price movement. 100%. And that's going to be, that should excite you, especially for how long we've been going down. So I'm really hoping for the green day to be today, because having 3 days in a row of green days would defy all the odds, completely defy all the odds. But we don't have to have a green day today, because tomorrow we have a 19% chance one way or the other. The odds of having a Wednesday be green are 1 in 5 chance one way or the other. Really low odds. We all want to see it rip up, men. We all want to see it rip up. And let me tell you, that buy or that sell order of 49,908 has not taken any hits whatsoever. Like, just none. Mm, that coffee is cold. I really need to start. You know what the problem is? You know those insulated mugs that you can buy? Like, none of them, they're just silver or some color. You can't buy any that have cool sayings on them, like "kick today in the nuts." What the heck? Why do I have to slap a sticker on one of those things in order for me to have a cool saying on it? Why don't they have them pre-engraved or whatever? Like, I don't understand that. Like, somebody could make a killing if they just started putting out insulated cups that had cool sayings on them, like a coffee mug is supposed to have. Am I the only person that thinks like this? I don't understand it. Welcome to my mind. You've entered the dark zone. So with the estimated current short share interest of the free float being a little bit lower, guys, that means that the short interest has definitely gone down a little bit. It's not cover. It's not cover, watcher. Cover implies that they're being forced, right? It's closing. In order for them to close positions, they have to get the positions in the money. Otherwise, they can't really close them, because they can't find shares on the market. Nobody's selling. Once they do start selling shares, guys, here's the thing, and this is where I hate saying this, because it kind of causes your mind to kind of go down this, like, rabbit hole that is kind of a dangerous rabbit hole to go down. But the minute that people start selling shares back into the market, the minute that happens, what you're going to see is you're going to see this explosion in volume, right? And because that's what I've been talking about, like all these shares like passing through many hands, having a lot of synthetic volume starting to increase. And they're going to try and suck up as many of those shares as they possibly can, um, to close out positions. So I know where that can be misconstrued. I'm not saying sell. I am not saying sell, but I'm just saying that, eventually, when an institution does decide to sell some shares, when we have institutions that sell shares, that will cause major, major damage to either price or on loans going through the roof. That's correct, Watcher. Okay. Now you're on the right track. And if nobody's selling and people still buying, MOASS Rocket is getting filled up, right? That is correct, 100%. 7 a.m. pokey stick of volume coming in here. We have Bad Back saying, good morning, people, another day on the another dollar down. People are selling. Smack in the face. Yes, 100%. I mean, you can see it on Fidelity. There's definitely sell orders in there, but their buy orders suck that up. So, and of course, our brokers are skimming off the top and making those in-house trades first before sending them out to market makers. But irregardless, the amount of people who are buying is exceeding the amount of people who are selling, and that can be seen through turnover. It can be seen in inflow versus outflow. It can be seen in OBV. There's so many places where you can see that the buying is overtaking the selling by large amounts, and so it doesn't matter if it's orders or shares. All the other indicators that I just told you about all tell you that it's actually shares. Otherwise, if it was shares that were exceeding in those sell orders, then you would see outflow being much higher. You would see OBV going down through the roof, down through the floor rather, and you would see there'd be other indicators as well that would be showing you that you're having a sell-off, but you're not. You're not seeing those indicators. Those indicators are non-existent. So yes, people are selling, but it has to exceed the amount of people who are buying, and that's not happening. What do you think about last Friday when people bought in and volume went up, but not the price? I mean, it was obvious. It was obvious that there was clear manipulation that was going on. There was actually if you look at OBV for Friday, Watcher, there was some selling action that occurred on Friday. Uh, in fact, let's go back and take a look at here. I just want to do the pokey stick of volume here real quick. We have 23,000 shares, and I think it was about 80,000 on volume already. 105, that's probably going to be like 50, 70. Probably going to be on the high side on that, but I'm going to go 40, 60. 40, 60 in volume for the day today. Yesterday's borrowed shares returned. The borrowed change was 3.23 million Yishin, if that's what you're asking. The total amount of borrowed change was 3.23 million. Is the squeeze over when all the institutions have sold? That's a weird way to ask the question. Is a squeeze over when all institute? So I think what you mean is a squeeze over when it's a weird way to ask the question. I don't know if I can answer it the way that you said that, because I'm confused about which institutions you're talking about. Because I don't ever expect to see all long institutions selling off their entire positions. So I'm not really sure which institutions are. Let's start with Samuel. Which institutions are you referring to? This waking up at 4 a.m. every day to sell my stock is wearing on me. It's not going to happen like that, Kevin. So if you're waking up at 4 a.m. every single morning because you're expecting something to happen, I can tell you right now that a short squeeze does not, a gamma squeeze or a short squeeze does not work like that. Not in this particular context. With the amount of volume that we have going on in this stock, I can tell you right now, Kevin, that is going to absolutely be a very uh, drawn out period of time. It could be up to a month, the squeeze, like the actual price run. So having to wake up every single morning at 4 a.m. to decide whether or not you're going to sell your shares because you're waiting to see a huge spike in price is not how this is going to work. Oh, The 4 a.m. dip. Sorry, man. I don't get jokes. I I don't joke around here. Samuel's saying the big ones, BlackRock and Vanguard. So yeah, I don't think you're going to see that happen. The squeeze isn't over when they sell their positions. It would actually start. It would start when they sold their positions, and the reason it would start when they sold their positions is because the injection of those shares into the market is going to cause a lot of activity with shares being moved around. So if they did indeed sell their positions, you would see massive amounts of movement inside the market to untangle the web that's there. You would see huge amounts of loaning to try and suppress price as much as possible. And as price was moving up, you'd see a gathering of as many shares, real shares as possible, so they could close their positions at a lower price. And potentially not opening up more short positions or having a whole lot of short positions open at the time when as price was moving up. But as we well know, they have short positions are the estimated current short interest rate now is at an all-time high. It's at an absolute all-time high right now. So if price were to start, if Vanguard and what was the other one? Vanguard and BlackRock. Yeah, BlackRock. Vanguard. If BlackRock and Vanguard were to sell off their shares, price would start moving up. But in order to keep price from moving up, they would have to um, start loaning shares to suppress price, which we see every single time we start having spikes in price. We see them loaning crap tons of shares because they gotta keep it from moving up too quickly. Control it, reduce volume. It's like the same thing over day in and day out. The RSI is right here, and if you want to take a look at the daily RSI, if that's what you're talking about, daily RSI is 21.17. The weekly RSI, if you're looking for that number, is 33.01, which is very, very low. Not quite into the oversold region for that one. And then the monthly, if you wanted to go out that far, is sitting at 47.35, which is almost halfway in the middle. So it depends on where you want to look at it, from what perspective you want, what time interval you want to look at it from. But the last time interval where we're on a highly oversold, like large time interval, would be the daily. Kevin says unless they just pull another billion volume day out of their ass like they did last year. 1.2, right? Wasn't it 1.2 billion? 1.4? No, maybe it was 1.4. I always forget. Was it 1.2 or 1.4? I feel like it was 1.2. January 27th. Yeah, it was 1.22. 2222. And again, that's a great example, Kevin. That is a great example. Like if you go back and you look at, what did I say the date was? Yeah, January 27th of last year. The stock at that time only had, I believe it was 300. I think it was like 387. I'm guessing off the top of my head. It's been a little while since I've crunched the numbers, but I think at that time AMC stock only had about 387 million shares in the free float, and they traded. Maybe it was higher. Hold on a second. Let me just check. It's gonna drive me nuts. Uh, nope. Wait. Historical. Give me a second here. Okay, so it was actually, that can't be right. Is that right? That can't be right. Hmm. I just pulled it up on AMC. I look at sharesoutstandinghistory.com, and this is reporting that from 10/30 of 2020 to 3/11, there was only 85.62 million shares in the free float. It's saying that it didn't change to 450 million until 3/11, and I don't think that's the case. I feel like I feel like it actually changed before the January run in like late December. I'm almost positive it changed. I'm pretty sure it was like 300 and something million. But irregardless, I got to find a better website for tracking on this than that one. Mm, here we go. Yeah. So 339. It was 300. It was actually 377 on the 29th. So it was like 2 days after the run up on the 27th. But on the 27th, there was 339 available shares. 339 million. So, and then we traded 1.2 billion shares in that single day. In a single day. And that begs the question, how in the world do you trade that many shares? How do you trade the float that many times over and only have the price move up as much as it did? How do you not have it move up more? Because it should only go two directions. It should either go up or it should go down. And if price is going to go up and it trades over that many times, that was not enough. It was not enough. There was price suppression going on during that period of time, for sure. And so it ends up trading down a little bit afterwards, and then sideways for a little bit, and then we have that next pop. So it just kind of proves the idea or the point that the synthetic shares that are in existence are really, really super high. Just because you can't, I mean, those numbers are just absolutely silly ridiculous. Hey, no problem, Samuel. I had a problem understanding. Um, some people say when the shorts start to cover, they will only try to find the real shares, which the big institutions only have, and try to f with that. Um, kind of, sorta. My guess is that it's really only going to come down to one of three things, right? We're either going to have liquidation of hedge funds and complete entire liquidation of hedge funds, which will cause the MOASS. Two would be bankrupting of the company. Um, and the third is like a government intervention where they shut down trading and basically say like, we don't want to crash the market, and so therefore we're going to give you this X price for closing out all of these positions. And who knows what that price is going to be, but it's going to be a lot better than whatever it is you paid for it. EJ says, so if there was 100 million shares available right now and they started buying back their short positions, it would still squeeze up some. I mean, so if there was 100 million shares right this moment, like let's say, I mean, even the institutions only own 172 million shares. So let's just assume for a second that they sold. I mean, they would have to sell off like almost their entire positions. So, in fact, I don't even think any of the institutions even own 100 million shares alone. So let's just assume that BlackRock just decided, we're out of this crap, and they sell every single share back into the market. It's less than 100, so we're going to go with that number that's less than 100, but they do, right? We'll assume that they sell every single share. The hedge funds would start buying up those shares massively, but in order to keep price from rising, because we'd be buying too, right? We're not going to stop buying. We still start buying those shares as well. So there's going to be a fight between market makers and well, hedge funds and of course they're going to win most of the fight, but we're going to be sucking in those shares as well at the same time. So um, you have those hedge funds trying to absorb all those shares on the market so that they can use those to unravel their positions. And meanwhile, we're buying at the same time. Well, they have to start shorting the stock while they're doing that, which means that they've got to start loaning shares to drive down the price while they're collecting those shares. So it ends up being this like big, huge circle jerk of more digging themselves into a hole more, and that's where price starts ripping. It would definitely squeeze up some. It would be very, very difficult for them to control that many shares hitting the market all at once. Very, very hard. I don't know, man. Einstein, I don't know. I don't know, man. I have a feeling I have a feeling that maybe if they have the rules all in place, and that might be the first step to um, government intervention, which is what Stephen wants me to talk about. Do we have a precedent to go off of? No, absolutely not, Stephen. There is no precedent for this whatsoever. None. It would be absolutely historical, and people would probably go apeshit, apeshit nuts over this, because it would be an unprecedented event. And my guess is that the only way that they would let that happen is that they will tie this they will tie the event to something, some kind of news. They will tie it to that news and say, we can't have this. For national security reasons, we can't have this. Lou said we're really close. Do you agree? I hate setting dates, man. I really do hate setting dates because I just know it gets people down. I don't have a problem with setting dates. I love dates. It gets me looking forward to another date. But for some people, when you put out dates out there and it gets to the date and nothing happens, and they're just kind of like, so it's like I hate throwing dates out there, but I see some exciting things in the numbers, if that's what you want to hear. Nosa says, I'm gonna take a break here in 2 minutes, guys. I got dishes to do. It's dish day today, and the wife is coming home, and it's not her last day at work. She still got to work another night, so if I don't get the dishes done, she's gonna come home from work and have to do. She's gonna come in and see the kitchen and be like, oh, just start doing them. So I gotta go. I gotta go get to those before she does, or else I'm in trouble. So I've got 1 minute left. I've heard or read that there's multiple catalysts that can trigger the squeeze. Market crash is one of them, but I fail to understand how a whole market drop can benefit this share. Um, that's a long one to get into. If there's liquidity crisis, it will only cause massive sell-offs to get cash, making stocks to drop as well. What's your understanding and rationale on this? And I think what I would say is that you have to hold some of the new rules now that are going into place is that you have to have a 10 to 1 ratio, a 10 to 1 ratio in liquidity for every short share of interest that you own. So if if the market starts to tank and you still own that short interest, then and your liquidity starts disappearing because the rest of the market is going down in price, and that's where your liquidity is held. Or I always say liquidity, but I think it's equity. If they don't have substantial amounts of money placed in stocks that are you know doing well or not losing their value, then they lose their value. If they lose their value, then they don't have that 10 to 1 ratio. If they don't maintain the 10 to 1 ratio, then they start getting margin calls, and that's how you start to see price rising from the stock market crashing. SSR for the day today is 1498. I don't know what you mean, Joe, by 2-1 for AMC and GME. I'm not sure. I didn't want to say it, Einstein, but you kind of hit the nail on the head there. I don't want to scare people. I don't want to scare people. Guys? We have something scary going on. We have war breaking out potentially in Russia and Ukraine. I mean, everything is. I mean, for crying out loud, our president came on and said, "Oh shoot, she's here. I gotta go, guys. I gotta go. Take care. I will see you guys back here in just a little minute. I got to get to the stuff here, and I will see you." All right, guys, I am back, and let me see here. Has anybody seen Monty yet today? I have not seen Monty at all. Well, actually, that's not true. I think I saw him first thing in the morning. Yeah, he was on first thing in the morning. Did anybody see if he put in a price prediction? Let me scroll up here and see. There it is, 1751 to 2051. He's a little bit higher than I am. 1751 to 2051. I have not seen Duncan's prediction. I'll reach out to him. I'm torn, guys. I did 16 to 19 yesterday, and I'm kind of feeling like doing the same number again today. Except for Eric contacted me in a text and said that he's picking 16 to 19. So, and that's up. Eric was at 15.6 to 18.6 yesterday, so he's actually looking more bullish today than yesterday, which I'm actually looking for a more bullish day as well. But I think it's only going to close maybe slightly higher than what it closed at yesterday. Maybe like it could just even be like a cent or two. But let me think here for a minute. I feel like 16 is low enough to catch the bottom side. Maybe I just do like 15.75 to 18.75. Let's do that. And let's see, got to get a hold of Duncan. Alrighty, let me move down to the end, see what you guys are saying. They're taking it to 1350, Zach. I got you down. 1350 it is. Good morning, Ray. I do expect there to be a lot of volatility today, guys. Volume prediction for the day is 40 to 60 million, but I'm expecting to see a lot of volatility. And this movement right here is kind of sus. And I want to go back in the time history here and see what happened at 9:03 in the orders. Nothing. There was a 300 share order that went through for 1663. I don't even see 1663 in here. There is nothing at that timestamp. Interesting. At 9:03, it shows a high of 1663, but I don't even see a price unless I'm missing it. There it is, right there. It actually shows up for 9:02, right on the dot. 456 shares purchased. Very interesting. Steven, what you're going to find out is that we have like 3 or 4 very distinct FUD spreaders. I don't kick people from the channel. I leave that to my moderators' discretion. I have a very interesting viewpoint, and it's that if I stifle speech, if I decide who gets to say things and who doesn't get to say things, then it's not an accurate representation of what our body of people feel like or are saying. So, however, people have mentioned that if you don't like what it is that you see a particular person saying, you can actually silence that person yourself. You can block that person and not see what it is that they're posting in there. So if you're tired of seeing a specific person writing something in there, sometimes I don't even respond to what it is that they say. You'll never see it again if you choose to block that person. So it's entirely possible for you to do that on your own. But since my moderators minus one person I think of off the top of my head, out of all the moderators that I have, only one person is related to me, and is my brother-in-law. And so for the most part, everybody else is complete strangers to me that I met through this entire process, and no longer are strangers. They're pretty decent friends. Jamie's Healing Hands is actually one new one just as of recently that I actually need to take some time to get to know. Just because it's needs to be done. You can't have a moderator and not get to know somebody. So but I'm just gonna say that um, see, I like that, Steven. I like that, Steven. And the reason that I like seeing what it is that everybody says to Steven is if you want to know what the narrative is of the other side, you have to get to know the other side. Knowing your enemy is probably one of the strongest attributes you could possibly have in a war type situation. And I do think this is war. Absolutely 100% this is war that we have going on, especially psychological war. Yeah, we've had a couple of those, Saint Monet's dad. We've had a couple of those this morning. As soon as they get hit, they pretty much disappear. They don't last for very long. It's just kind of posturing. Two weeks. Joe, I love it. I love it, man. That's good stuff. Ooh, Bobby says, are they going to try to trigger SSR today? I wouldn't doubt it. I would not even put it past them trying to trigger SSR today. Depending on how bad liquidity is, right? Like if they're having really low liquidity, if they're having problems, I would imagine they're getting kind of closer. I know I can see based off of OBV that there has been some orders that have sold off. I don't know how many shares they need to fulfill liquidity requirements. But if they're having problems with liquidity, you bet your bottom dollar are going to try and trigger that SSR. And the whole reason for that is that synthetic naked shorts are completely legal during times of low liquidity, and reg show has been tripped. So yeah, 100% they'll try to go for that. They tripped it on Friday and yesterday, so it's on for today. And if they wanted it to be on tomorrow as well, they would have to trip it again today. And they've actually taken a new approach. They've taken a new approach to how they're attacking the price, and then what they're doing is they're bringing it down in the aftermarket hours and the pre-market hours, attempting to drive the price down during those periods of time in order to get most of the work done. For example, right now we stand 4.45% down from yesterday's closing price. they're basically starting the day off halfway there. So if you saw the other 5% at market open or thereabouts, or it may not even be at market open. It might be actually after market open once that first initial push of buy orders goes through, starting at around like 10 a.m., 30 minutes after market open, and then they start pushing price down and trying to attack it down. So the attack in price would be a dual movement, a dual goal, right? A dual goal meaning that they're looking to, one, both trigger SSR, and two, also stifle or suppress volume as they're moving price down. I start the market off every single day with a launch, and it's actually time for me to do that. So I will see you guys on the other side of launch.
T-minus 90 seconds and counting. All systems are go. We're about 90 seconds from the launch of Space Shuttle Discovery. T-minus 60 seconds and counting. We are transferring to orbiter internal power at this time. Discovery is now running off its 3 onboard fuel cells. Coming up on a go for auto sequence start. And we have a go for auto sequence start. Discovery's onboard computers have primary control of all the vehicle's critical functions. T-minus 17 seconds and counting. 15, 12, 11, 10, 9, 8, 7, 6, start, 2, 1, booster ignition, and liftoff of the Space Shuttle Discovery, returning to the space station, paving the way for future missions beyond.
Separation confirmed. Guidance now converging. Discovery's onboard computers commanding the main engine nozzles to swivel, aiming the shuttle for its precise target in space for main engine cutoff.
Should have a good forward link now and estimate.
You sound good.
Discovery Houston, negative return.
Copy, a negative return.
is in effect, y'all. I say the house of pain is in effect. You know the house of pain is in effect, y'all. And anyone that steps up is getting wrecked.
Good morning, you filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw the hedgies. That was good old Stonky Kong joining us there for a little bit of jumping. Jumping around just like our stock price. Oh man, it always changes, Björk. I know it feels like it's making a difference, but I don't know that it is. It's just it's gonna happen. It's gonna do what it's gonna do, irregardless. James is driving down the freeway jamming. James, what are you driving down the freeway for, man? You're unemployed. You're supposed to be enjoying some time off here. All right, guys, price is starting to jet back up here a little bit. I do expect a highly volatile day today. I really am expecting, but I don't see a whole lot of volume based off of pre-market data. Pre-market data was only kind of signaling for 40 to 60 million in shares traded. So high volatility with low volume. Not really low, but mediocre. Um, Monty says, I believe the Fed speaks today at 2:30 p.m. Eastern. We'll check that out because that would be 1:30 p.m. my time. Oh, oh, James. Oh, I used to live in Phoenix. There's some nice golf courses out there. That makes sense. Get out there, hit some good balls. Yeah, I learned one thing when I was playing golf. As a brand new golfer, looked over at my buddy when I got to the I don't know, we got to a specific tee number. I don't remember what it was. I looked over and I go, "You want me to wash your balls?" You don't say that in golf. You don't say that. Well, the ball cleaner was on my side of the cart. I was like, "Hey, you want me to wash your balls for you?" You don't say that. That's not something you want to say. But man, I hope you have a great day golfing. That should be fun. I actually only golfed there, I think twice, maybe three times. I actually got to play that Eagle Crest. I think it's Eagle Crest is the name of it. It's over there by the airfield at the end of the runway. It's a military golf course. It's really nice, really really super nice. One of my, it was just nice. Yes, it is. It is totally a stress reliever, guys. There's no reason that you have to sit here and watch this stock. If you're dedicated to what you think price is going to be in the future, and you know, there's just no need for you to sit here and babysit it as it's moving up and down, and potentially causing you stress. There's just no need to. You don't need to have that kind of stress. You'll know when it starts taking off. You can set limits, you can set price alerts, but don't feel like you have to absolutely watch this constantly. It is addicting though. It's definitely addicting. Let's see. Hayden says, Casey, I love watching candles and the line, but ever since you explained the single digit orders, watching watching that drives me crazy. Yeah, man. You don't have to watch it. You don't have to. It's not something that it's not going to change anything, right? Like sitting here watching, it's not going to change anything at all. I'm for the most part just trying to document history here. You know, I think what we have happening is history. So you know, me being here every single minute of the day is just me watching what's going on. Oh, I'm getting text about my taxes being submitted. I'm getting my tax documents. Once we have green on the screen, I will stay for a while. I can totally understand why. You need that boost of adrenaline. We'll take a look at numbers here, guys, in about 19 more minutes. In fact, since I'm thinking about it, I might as well start updating. Guys, we've had, for those of you who weren't here earlier this morning, the amount of shares that have been borrowed so far for the day is already exceeding what was borrowed yesterday. Yesterday was higher than what I would expect to see for a daily average and amount of shares borrowed. Yesterday was 5.15. I think the average is somewhere around 4.5 million shares a day. That's kind of an average day for us historically. And yesterday was 5.15, and then today, so far, and I have not taken a look at numbers. I have not taken a look at any of the numbers beyond earlier this morning when I went on break, which was like an hour and a half ago. They had already borrowed up to that point 6.5 million shares, which is quite a few shares that they borrowed. Man, talk about volatility. That is like super, super volatile. Major, major volatility going on here. Let's pull out the Bollinger Band on this bad boy. Oh yeah, look at that. It's trying to spike up. Price literally started spiking up so fast that it hit the top side of the Bollinger Band, but was already at the simple moving average. You can see that this is actually quite unique. I don't know that I've ever seen this, but we had a breakout. And do remember, guys, that I have my Bollinger Band set up for a 3 sigma, which is highly 97 point or 90 99.7 or 98 99.7% of the data is supposed to be within inside these bands. And if we broke out the top side and almost broke out the bottom side of the Bollinger Bands. We almost broke outside both sides. So huge amounts of volatility. Let me pull up Stonko Tracker real quick. I know you guys can see it, but I can't. I just want to see if more shares have been borrowed since earlier this morning. They indeed have. And that amount is 400,000 additional shares, which puts us at 6.9 million shares having been borrowed for the day today. And actually, there's more than that too. There's the ETFs as well. The ETFs went down an additional 250. $7.15 million shares having been borrowed so far this morning. It's pretty high. Crypto making a big comeback could pretend. Porter is saying that the crypto is moving heading back up north. I don't. It's not gonna. I mean, it's not gonna stay there. I don't think. I kind of was. If you look at like Bitcoin, I have this trend channel kind of going through here. I would imagine that what's going to happen is you're going to see something very similar to like this happening. You know, where we had the drop off and then it's going to kind of trade sideways for a while, probably until the end of possibly about here, and then it's going to either spike back up really quickly and then head downwards, or maybe just trade sideways and then start heading down from there. That's the second week of February that's going to start heading down. The VIX is down so far 9.36 this morning, guys. I said down, I meant up 9.36, which typically means that we will start heading down. Poor James. I hope James of Arizona is not going to be listening while he's playing golf. He's gonna, he's gonna be like everybody's in the car. It's gonna be like it's your turn to hit. He's gonna be sitting there listening to his phone. I can't. I gotta hit. Looks like we got a little bit of a Margaret Thatcher going on here. Still waiting to hear back from Duncan. Yeah, look at this range on this candlestick right here. We got 1555 to 1662. Over a dollar range. Over a dollar range on that single minute alone. If anybody knows, I'm just gonna throw this out there. If anybody knows or is a Pine editor of Pine is the type of coding that's used for Tradingview, please reach out to me and let me know. If you're extremely proficient in using Pine coding, please let me know. And that AP knows exactly why. Baba Booey. I can't yell at pop people's. I don't have a microphone, so I can't yell. Joe, I think we're okay as at any price, honestly. I don't see until I start seeing other indicator. Price is not an issue. Until I start seeing other indicators showing bad signs, I'm not worried about price. I need to see price is heavily manipulated. It's the other indicators that really tell me what's actually happening. Man, they did this again to this order flow distribution. They messed it all up. Hmm. Good morning, AP. Oh, I got a message back from. Actually, I mean, there is a lot of price action, Fred. I mean, we had in this single minute alone, there was a dollar. There's a lot of volatility here going on. A lot of volatility. If you look, we had over $1 in this single minute alone. The low on that was 15.55 and the high 16.62. I mean, there's some major volatility going on. So, as far as price action goes, it's heavy. It's hot and heavy. It's just low volume. And I don't know if I'd call it odd, but it's unusual from what we're used to seeing. I would, if you wanted to say, is it unusual for what we're typically used to seeing? I would say yes, absolutely. We're not used to seeing this much volatility within minutes, single minute candlesticks. And so, yes, it is odd. It looks like an M to me. A little bit of a Margaret Thatcher going on there. Yeah, it's actually, I mean, the order book looks like it's moving pretty fluidly. I refreshed this just a minute ago. I normally don't like to do that until after uh, the first 30 minutes of trading, but the inflow is currently higher than the outflow. So there's a lot of inflow, a lot of buying going on. Son of a gun, I keeps dropping my pin. Why is the price dropping, Peter? Have you explored the percentage turnover numbers? I actually don't watch that on a daily basis. I know a lot of people do. I probably really should be watching, but it does say the turnover is 1.57% as of right now, which is pretty low. Let me just check something out real quick here. How much was it? 1 point. well, Peter's asking why is the price dropping? Since market open, 1587 was the price that market opened at, and we're actually at 1593 right now. So I would not say that price is dropping right now. Why did price drop overnight? I think we've been seeing a continuous attempt over the last week or so of a new strategy where essentially they try to drop the price in the aftermarket and pre-market hours in an attempt to trigger SSR easier throughout the trading day. We saw that especially yesterday, big time. Dow is down 642 points. Holy moly, it does not look good. Well, VIX is definitely up 9.77%. It's possible, Adam. It is possible. Anthony, as far as percentage turnover goes, I 100% believe that that is true. And it doesn't, if you wanted to take a look at the OBV histogram in comparison to the price, I would say that that is 100% the truth. Way more diamond hands in GME than there is in AMC. You can't argue with the numbers. In fact, let's do a side-by-side comparison. Give me just a second while I try to pull that up. I think I will. Oops, that's not what I wanted. Where is what I wanted? Did I shut out my Tradingview? Oh no. Let me. I'm pulling some stuff up on the side here. I'm gonna pull it up in Tradingview on the side, and oh good. I'm gonna try and pull it up on the side and give you an idea. Using an OBV histogram to give you a representation of how that's the truth. But let me see if I can set this up right. Actually, that should be perfect. No. Let me just set this up just right. Okay, so what I'm going to show you here. I'm going to take away some of the information on the page, guys. We got about just a couple more minutes anyways. I'm just going to show you AMC's chart real quickly here. And what you're looking at here is you're looking at OBV as a histogram. You've probably seen this. I've shown this to you a couple different times. I think I'm happy with the way I've got it set up in here. So you can adjust the levels of OBV, and what I'm trying to do is I'm going to show it to you over here first. I'm trying to attempt to get price to match in where the on-balance volume drop or started to increase the most, right? So there's a lot of volume that really started to peak up here, and so if you wanted to match this up to price as volume is increasing, then what you do is kind of put it on the page here so the price kind of matches up with that volume increasing, right? And once you have the initial volume increasing amount matching up with your price, you can see that price and volume correspond or interact with each other very, very appropriately. Like it looks good. You can see here that price moved up, the volume kind of trended with it. Price moved down, volume moved with it, and everything looks really kosher here. Then all of a sudden you start to see where there's an imbalance, and this is where I would say that the price is devalued. The price is devalued in here. The volume starts spiking, right? But price doesn't follow right away. Price is lagging behind. Then all of a sudden price tries to catch up with it. It catches up too far, and this is where you have inflation, like an overinflated price of action movement here. And you can tell by the volume that's going through here, you can see that volume doesn't support those levels. And so what happens to the price? It crashes back down into the volume, and it overcorrects. It actually overshoots a little bit and then comes back up. And then you have a synchronization of the on balance or the amount of volume going through the stock versus the price. Now look what's been happening ever since. Ever since this equilibrium right here, volume has remained high, but price has been devalued over time, especially right here. This is very, very significant point. And I'll show you where that is here in a little bit on Ortex when I pull Ortex up. Remember this point right here. Remember November 18th. We'll go with November 18th as the date. That's where the date where it really started falling off. There was some selling that happened in here, and you can see it. You can see it in the on balance volume as well, but the volume didn't really fall like the price did. There was an over devaluation of price here, and you can see that it's being over devalued compared to where volume is. Yes, there's definitely selling going on here. You can see it in the chart. You can absolutely see it in the chart. And I'll do the same thing with Jimmy here right after I get done with taking a look at our numbers. But remember this date here when we go back and we look at Ortex, and we're going to look at November 18th, and I'm going to show you why. What happened right here November 18th? Why did the price start moving downwards? And why didn't volume reflect that? Why didn't it reflect? Why did people hold through this? How can I prove that people held through this? And what actually happened with the devaluing, even though volume was really still high? So it's a great way of looking at things. So let's pull up our numbers. It is time to do our first review of the stock for the day today. I'm going to go ahead and pull up um, our data. I'm going to take you over to the other screen, and let's take a look at all of our numbers here and figure out what the heck is going on today. What the heck? Moving some screens over. Alrighty. Starting with the top left-hand corner, price predictions tallies. Guys, for those of you who are new, it's just for fun. Don't freak out. It's not meant to do anything, cause any harm, cause any pain, suffering, whatever you may want to call it. It's just for guys who are trying to keep sharp with the price and trying to come up with a $3 range of price predictions every single day and to try and win beers off each other. It's just for fun. We have Monty, Eric, myself, and Duncan in the race for today. Monty, myself, and Eric had all got a point. Duncan, I didn't get a price for yesterday. He had to get a 0. I took his Friday tally or Friday number and didn't pan out for him. So he just didn't get a point just because he was absent. But Monty, Eric, and myself, we all got points for the day. Price prediction for today. I've got 1575 to 1875. Eric's got 16 to 19, and Monty has 1751 to 2051. I'm still waiting to hear from Duncan on a price prediction, but he's not. He's busy. He's tied up. If somebody else wants to put in a price prediction for him, I'd be more than willing to take it. And we'll see if he comes through, pulls through a little bit later. Excuse me. Taking a look at Off Exchange right here next to me head, right here next to me head, we have Off Exchange. Off Exchange 52.44. Those are the numbers from yesterday. Let's refresh it and see what we got. SSR is trips, so these numbers are probably going to be low. 43.27, very, very, very low. 43.27 going through the Off Exchange right now, and CBOE EDGX is at 11.41. So yeah, they don't need their price discovery shield when they've got SSR on and tripped. Just no need. Unless volume's like super, super high and they can't keep up. Moving on to Ortex. Ortex currently, let me update it. Ortex currently reporting a borrowed change of 1.32 million shares. Its estimated current short share interest of the free float is at 20.15, making JP extremely happy. Moving up to the top right-hand corner, today we hit an all-time high, a new record for institutional share ownership of 173.137 million, which is 33.69% of the float. Let's refresh that and see if it's gone up. Sideways or down. Still the same number. Okay, and I've entered it in already, so we have a new high for institutional share ownership. Max pain for the day today, guys, has moved down to 19. And let's refresh those options and see where the most amount of options are coming through. On the call side, at a $17 strike price, which is what it was yesterday with the most amount of volume, there is currently 3.6 thousand contracts. On the puts, highest amount of volume eking by as the winner is 14, but 15 is a really close run up. Yesterday 15 was the value. So there's a little bit more of a spread now between the call strike price and the put strike price. There's 3.8 thousand contracts at 14, signaling for a $15.50 close, perhaps. That's what the options are kind of signaling for right now. It could change. All right, guys, take you over to Ortex. Now, this is the one I wanted to show you. Remember how I was talking about November, what was it, November 18th, wasn't it? Pretty sure it was. I can't see what you're writing anyways. I'm going to show you something. Let me show you something. Let me tell you something. Let's just say you're standing in a puddle of gasoline, and you just so happen to light a match. Hot. What do we have here? We have exchange reported short interest. We have on loan amount. I'm going to draw a picture on this. Look at this right here. Specifically this point right here. I want you to see that the on loan amount became very, very dangerously close to being exactly what the short interest was. Now, if we go to that actual date of that data point right there is November 17th, where the bottom of the on loan amount hit right there on November 17th, which is one day before that date that I showed you where the sell-off started taking place. Now, long institutions make money off of loaning their shares. They really do. They make a lot of money off of loaning their shares. And if this, if this is the case where on loan amount is getting down to zero compared to what's short interest, then they're not loaning shares any longer, right? They're making their money in this gap. The larger this gap, the more money they're making in here, okay? In order for them to get hedge funds to start loaning shares again, my belief is that they sold off shares, right? They sold off shares and hedge funds wanted to eat up those shares. They needed to eat up those shares because if they didn't eat up those shares that they needed, then they just go into our hands, and that does them no good. So they're using those shares, they're eating up the shares that are being sold into the market, and at the same time, they're shorting the market down because they don't want price discovery while they're eating up all these shares. Meanwhile, we're in there trying to buy these shares too. So what ends up happening is they start borrowing again. They start borrowing, 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 and now you have a separation or a gap between short interest and on loan amount. So now long institutions are making money again, and they're happy. They're like, cool, it's all good. Except for one thing. Starting about December, it was about December 1st, I think, right here, the bottom of the price, something happened. And I feel like, based off of what I've seen with price movements since December 1st, is that there was a change in how price movement has been happening. Like less manipulation from the hedge fund side and more manipulation by long institutions on price. I think they're making money right now, and I think they're making money on the derivatives and controlling price to be in a certain point so that the most amount of derivatives expire out of the money and that they continue to make money on the short interest and the loans. They're making money on both short interest that are expiring out of the money and the loans that are being held by hedge funds. So our long institutions, our brokers are making money right now. And they're like, they don't want this to stop. They don't want to stop making money. So they're going to continue to do this so long as the derivatives are making them money. Once that dries up, once that money dries up, then they'll probably let this thing start running. And it was brought to my attention this morning that the second week of February, the options look extremely bare. So that would be a drying up of the derivatives. So that's what I'm hoping for. We'll see. We'll see if retail has learned their lesson, because there's a lot of money being lost right now in options. A lot of money. We shall see, though. We shall absolutely see. But what I really wanted to show you, I think, was this utilization dropping. Utilization is dropping quite heavily right now. If price is going to start moving back up, nobody would want to have shares on their books, right? So they're not borrowing unless they absolutely need the shares. 100% absolutely need the shares. The amount of shares that are available to borrow right now is at an all-time high for over a year. Since January of last year, the most we ever had was 155 before. There's now 160 million shares. Remember, guys, institutions only own 173 million shares, and the total available amount's 160. What's left is nearly one third of that total amount. They have been absolutely hoarding shares, waiting for something to happen. They have 49.9, almost 50 million shares just ready to go, waiting to loan those so that they could do something with them. What are they waiting for? What are they waiting for? By the way, prior to last January of last year, utilization was around 94 to 100 down to 94% and took a dump all the way down to 81%, and we're actually lower than that by a little bit, 81% before spiking back up, and spiking back up right about when price started launching. So that we have a history of this happening. This has happened before. What happened in January of last year and what happened in June are two different things. But what happened in last January, we did see utilization drop before price started rising. Orders by Fidelity customers. AMC was in 10th earlier this morning and GME in 11th, but it looks like we've fallen off the top 10 most heavily traded stocks. And AMC is now 14th with 68% buys and 32% sales, which is very good. And GME is in 18th with 77% buys and 23% sales. Strong looking numbers. Shares having been borrowed for this morning so far. Man, I'm glad I recorded what I recorded when I recorded, because gee whiz. Looks like for the most part just returns now. 1.9, 2.1, 2.9, 2.9, 3. Man, they are returning shares. Big time returning of shares. 4,000 contracts are in the money on the calls. 44.7 thousand contracts are out of the money on the puts. As far as somebody saying there being a light period of a light period week, this is it right here. There's only 15,000 contracts that are out of the money for the second week of February. So not a whole lot going on here in the options chain. SSR gets tripped at 14.98 today, and SSR is on from tripping yesterday. Hey, look at that. I got a screen there. Looks like Webull died on me. All right, let's see what's going on here with our market. NASDAQ is down 2.78, Dow Jones down 1.98, and the S&P 500 down 2.44. The market is on fire with 6,207 decliners to 1,269 advancers. The VIX is up 17.76%. Super, super high. Normally, we are falling in price when that happens. Normally. IWM is down 2.62. Tesla down 1.15. Amazon down 2.83. Cinemark up 0.32. Doge up 1.3. Bitcoin down 0.66. GME down 0.38. Hood down 0.5. And AMC is down 2.22. Refreshing our inflow versus outflow to see what the spread is. There's a 5 million spread with more inflow than outflow. And we have traded 11.56 million shares so far. Let's see what kind of pace we're on. We're on pace for 100 million shares traded for the day today. My guesstimate was between 40 and 60 million. Let's see if that pans out. These last 2 minutes right here in volume were pretty much both were over 250. This one wasn't, but I mean, you could take the top off this and add it to this, and it's over 250. just lop off the top. Let's see. On the daily interval, we currently have more buying pressure. What? So what? When did this change over? Okay. Well, it's been quite a while since this has just turned. As of today, there's more buying pressure than selling pressure with an RSI of 20.71. On the hourly, we have more selling pressure than buying pressure with an RSI of 48.46. On a 30-minute interval, there's more buying pressure than selling pressure with an RSI of 55.78. And on a 5-minute interval, more buying pressure, which just crossed over in the last 5 minutes, with an RSI of 67.43. It does appear that we've touched the top of the Bollinger Band here on the 1 minute several times, and so we will probably see price return to the simple moving average before being able to move back up. I feel like humming tunes today. I don't know why. I just want to hum tunes. I got tunes in my head. Looney Tunes. All right, let me see what you guys are saying here. You thought that was a phone number? Unless you're posting returns, Moto, credibility equals 0. I'm confused. I thought I was Moto. Hayden, are you talking to me? I don't get it. Who are you talking to, Moto? I'm Moto. Hayden, I'm supposed to be Moto. Who are you talking to? Anthony says, I really just don't care, and I'm sure that everyone else here who is actually bullish on AMC doesn't care either. What are we talking about? I don't know what you guys are talking about. Thank you, EJ. That's what I tried to strive for. On the screen right now, I am using Webull. I by no means advocate it. It's just I like it. It's pretty. I have ADD. It is extremely easy for me to navigate through. Let me just say this. I like to use TradingView as well as Webull. I kind of view Webull and Tradingview as like being the difference between owning an Apple phone and a Android phone, right? And the reason I say that is that Webull's like owning an Apple where everything's plug and play and like you don't really have to do too much to alter things, but you don't have as many options on how you view things.